Okay. I actually was fast deliberately because we are behind time. One, two, the slide I was actually using to illustrate what you actually talking about was not what we were going to use going live. That was just that was just more of a reference point. And so by today, we go into what matters. You cannot use those slides to trade. It was just for reference purpose. That was more of like an introduction. But today we'll go step by step while we'll go to the slide and then we'll go to the trading platform. Thank you for that observation. Any other person, please? Just one more person and then we go live. I believe this was a slide that was a bit fast, going up, down, and stuff like that. I believe this is one of the slides, and then the three candle patterns. The three candle patterns is more of an advanced form of analysis, but we'll see how we can apply it as we go further. So without much of taking time, because today we might take a bit of time if uh, God permits. So I know yesterday we spoke about the three candle patterns, and then I spoke about trend line, and I spoke about um, market structure, and then I did justice to this swing point, telling us what swing point is, and then how we can find the Asian, London, and New York session, and I show us the tool that we use. Maybe let me show that tool again that we use for. So you can see the tool on the screen. So just a moment, I show us this tool. Uh, this tool is where we do adjustment, and I told us that because there is a bit of change in summertime, and then instead of using +1, which is the normal GMT, we are GMT zone, but because of trading time, global financial trading time always has this adjustment that must always align with your broker. And so you must always know most brokers will send emails notifying you of the adjustment in trading time. And so you have to always follow those informations to know the adjustment. Most brokers, you might find them, they are +2, +3, +4. So you have to find a way how to relay it to this London Open because it's very important. It's very important in the sense that you need to mark this London Open, New York Open, Sydney Open, and Tokyo Open on your chart. You can concentrate on the ones that interest you. Some people are just interested in trading just the London session and the New York session, which is what most of us do. And to an extent, in case you didn't trade the London and the Sydney and you are awake and you are free, you can choose to trade the Sydney and the Tokyo. There are people that's the one they focus on. But for the purpose of this class, I'm going to focus on just London and New York session, where we actually trade what the market is saying. So there's something I have not added. Maybe by tomorrow we'll talk about it, where we'll be talking about fundamental analysis. Is there enough just to it's not enough just to talk about sessions without knowing the news that accompany these sessions. You need to know the economic news that accompany the opening of these sessions. As the sessions open, there will be announcement, there could be policy change, there could be economic policies change, monetary statements. So some of these statements can influence the fluctuation of price in the market. And so you need to pick these things and leverage on it. It affects the movement of price. So I told us that this is a tool that you just need to get. It's free online. You can always start Forex Market Hours Monitor, and then you can download them. If you don't have it, maybe those that will be in our clique will make available all the tools they need to keep up with the the skill and the demands of this industry. So I showed us this timing a tool. Let me see. Yeah, I showed us the tool I use in a website tool that I use. I remember it's a tool when you go to extensions. Yeah, there are extensions you have on your, or you can download it on your Google Chrome or on your the Brave um, browser that I use. And so just like yesterday, you can see that we are always starting when it is almost 44 minutes to close of New York. London is closed. Tokyo is closed. It will open by 1 a.m. our time. And then Sydney also will open around 1 a.m. So if you are still awake by that time, you can choose to trade around that time. And then New York will be closed in the next 44 minutes. So you can still trade. Does that mean that you cannot trade other currencies? No. All the currencies are open. You can trade them, but there won't be high volatility and the liquidity will be low. So the movement of candles and price fluctuations will not be such that will be encouraging. It will take a lot of your time to make some profit. So that is that about the the tool. Because you need to get this tool by your side and know what you are doing for time. So let me now go to our chart because we started something yesterday here, and I will want to go deeper into some of those things we started talking yesterday. And I told us that I want to really talk about candlesticks. And yesterday, thank God today, I am actually recording to this class, so we won't have the experience we had yesterday. And for some reasons, I've not been able to record, do a personal recording of yesterday's class. Probably I will do it one of these days and post it in replacement of yesterday's class that was not recorded. So yesterday I showed us how to customize our MT5 and make it look a bit closer to TradingView, which is the most popular trading platform that everybody uses for a lot of analysis. And by the time we finish this class, and then we'll have members that will join our next phase. We'll be using mostly we'll be using TradingView for most of our training analysis and then signals as it concerns Forex. Now, today I want to show us how to pick some tools and start analyzing the market. Looking at the candles, I am actually looking at, if you look at this time frame here, look at it. I drag, I show us how to pick it. You can come to under view, you can come to toolbars, and then if I click this, you see it's no longer there. So you come back to view. If you want to add it, just click time frames. You have it. And show us how to drag and place it here. So I will still do this video so that if you want to make a reference to it, you can actually do that. Now, based on this time frame, what you are looking here is the daily time frame. And what market am I looking at? I showed us how to pick market. Control M, if you still remember, and Control M will actually open a window, actually minimize the window. This is the window. This is how it looks like. So because I always like my chart to look clean, I drag it this way. You see the way I drag it, I close it. Why do I keep this? It tells me when my server is active. It will show as the time is going. It tells me that internet needs to be very fast. I need my internet to be fast. So it tells me that I'm in sync with the market and with the server. As this is the seconds is going exactly with my seconds. And you can see my timing here. So I need to get this information. All right. So you can see what I'm actually showing us here is that you see my timing here. my timing here, it aligns with this timing here. Look at the timing here, down here, where this cursor is not allowing me to, all right, it's not allowing me to show you the timing here. But look at it, the time, your window time has to be aligned. It's showing you here, 24 July 2025, and my local time is 2020. It's telling me that the time here is 8:20. So that is 2020. So it's in sync with the local time. You see, so now look at this timing here. Look at this. Look at the timing here. Do you see this time? It's telling me 22. While my own local time is telling me is 20. That means that this server, this broker I am using, is 2 hours ahead of the my local time. So whenever I am calculating London open and my time is the same. If in London is 8 o'clock, it's 8 o'clock. As it is here is 8 o'clock. London is 8 o'clock. So that means I will add 2 hours to every time. So between London and Eastern time is minus 5 hours. So if I'm adding minus 5 hours, so with my London time, I'll also add these 2 hours to it. That means that we are looking at -7. So whatever thing I'm plotting here, in order to be in alignment with London, with New York Eastern time, it has to be -7. Now, some of us might still be a bit confused. What am I saying? Now, I have a tool and a template which I use for my trading. It makes everything more easier for me. So if I am trying to pick my timing, I've already adjusted everything. It automatically plots everything for me. All I need to do is to just go to my template and pick my template. When I pick my template, it just fixes everything for me. So let me say I'm picking my Asian range template. So when I pick my Asian template, it's actually on the 15 minutes. So if I pick it on the 15 minutes, or let me just leave it on the 15 minutes. On the 15 minutes, I pick my template, already saved template. I pick my Asian range. So you see, it's plotting everything here for me. It tells me 2 days backward. That was what I was telling some of us. I have actually changed the time frame to 15 minutes. So at times it doesn't show well. You have to go between time frames and lower time frame, come back to higher time frame to actually get what you want at times. Then I have many of the time templates. I can pick my 15 minutes. I have many 15 minutes, which are different templates for different purposes. And so now you can see what I was actually trying to explain to us earlier. I have another template. Which is my EMA template. So this is my EMA template. Now, my EMA template plots the different time, different what they call it, the different sessions for me too. Now you can see some lines here. You can see some lines here. This is my Asian session. Now let me take the previous template that I just removed. Let me just put this template, and then this one is a bit clear for us. It maps it out. So what did I do here? This is where the day begins. This line you are seeing with the broker. If I carry this cursor, I put it here, you see it down here, right? There were some adjustments I did because I want my timing to be in alignment with Eastern time, with the Eastern time. That tool I shared with us earlier. So I need that tool to be in alignment. I need my trading time to be in alignment with Eastern time. So what I do, since I know that London opens by 3 a.m. Eastern time, I make sure that I mark out London open on my map. Now I go here. I already have another software that I've installed here. When I click these two, look at this part of this down part here that I'm moving this cursor. You will see two different dates and two different times. There are two different time zones. The Eastern time zone and the broker's time zone. The broker time zone is 2 hours ahead of my time, right? And then when you join my time and the broker time, that makes it, we are 7 hours behind Eastern time. Because from Eastern time to my time is -5. Then when you have the broker time again, you add it up, it becomes -7. So when I look at this timing, I look at, you see the timing here. You see, if you look at the cursor here, down at the end of the cursor, you will see a blue line and a black highlighted zone on the timing down here. Because if I move it, you will see it here, right? This part, you will see that. Let me pick a tool. What I'm showing is very important, very, very important. Look at this zone that I've highlighted. Look at this zone that I've highlighted. And look at this zone that is also highlighted. This zone is the Asian zone. This side is the London Open, LO. And then this one is called New York Open. We call it NO. So you can see that it's highlighted with lemon color. And this one, well, let me just call it red. Maybe I'm wrong. And this one, maybe golden color. Yeah, golden color. So when I go back to pick my tool, when I pick this tool, I come down to, I begin to look for 3 a.m. Now you can see I've gotten 3 a.m. So this London Open must be in alignment with Eastern time, but the broker time is actually telling me it's 10 o'clock. Can you see the difference? 7 hours difference between Eastern time and the broker's time. I don't know wherever the broker is. It's none of my concern. Mine is to make sure that the broker time is in alignment with the global Forex, acceptable Forex trading hours, which is always measured with Eastern time, which is New York time. So when I find the timing of the broker, whichever broker you are using, almost find, this is where you find the timing of the broker, the market watch I showed us earlier. You look at it, you look at your own timing at your desktop here on your computer. You now know, okay, what is the time difference between the broker and your time? When you get that, you now say, okay, that means that this time and plus your own time makes it 7 hours. Then what is the time difference between your time and this time and that other time? So if your times you are on TradingView, it's easier. You can actually adjust the timing of the platform, and I'll show you later on. You don't need to do this calculation at all. You just change the timing to -4 UTC, Universal Time, whatever. They call it UTC there. It's more of like GMT. The moment you do -4, it automatically adjusts the timing for you. So you don't need these two timing on this, on MT5. MT5 does not have Eastern time attached to it, except you have a broker that its own timing aligns with Eastern time. MetaTrader does not gives you the feature to customize your timing to Eastern time. You need to find way of doing this thing. So, and it takes a lot of research for me to get some of these things. Some of them I pay, they are not free. And some of them, it takes a lot of tax to actually get them. A lot of research and here and there and there and here. So on the Eastern time, I got my 3 a.m. Then the next timing I'm observing is the New York Open. And the New York Open happens at 8:30. It's actually 8:30, not 9 o'clock. So it's actually 8:30. So I'm supposed to put it here. So if I'm going to adjust this red color, supposed to start from here. Now you need to observe something. Do you notice the reactions of candle around that timing? The reaction of timing candles around that time. So the indicator I use, if you want to get the indicator, we right click. Now I have my own list of indicators here. Now some of these indicators are free, some of them are paid, some of them are customized. You can't just get them easily. You can't just get them easily, some of them. So this is where I begin to adjust some things. Now, the timing for my Asian, I have not even bothered about this Asia. I'm just trying to concentrate on London Open based on the time frame of the broker. So how do I get that? This is where you take the timing of the broker in alignment with London New York Open. Let's say 8:30. 8:30 is somewhere here. Please, who is that person? Can you mute yourself, please? Thank you. By 8:30, which is 2:30 our time, and then the broker time is saying is 15:30. And I'm concerned about what happens from 8:30 to 9:30, and I will explain to us as we progress. From 8:30 to 10, we call this kill zone. What happens around that time is very powerful. So we are looking at from 15:30 to 17 o'clock. 15:30 to 17 o'clock. So all I need to do is to adjust my indicator, which is my day trader work time. Then I come here to where it highlights. Don't think I'm wasting your time. You will thank me for this thing I am showing you. So I come to 15:30 New York Open. Look at it here. 15:30. This is a tool you will have if you are serious. You will have it. It's a free tool. You can always go online, search for it, and if you're lucky, you could get it. So to 17 o'clock. So do you see it has highlighted it, and then I can change the color if I don't want the color to look like this, but I can always change the color to what I want. If I don't want that color, you can give it the color you want. I would like to give it not tomato. Let me give it something more lighter, and then a London Open sort of pale green. I will give it something light green. All right, let's see how it goes. Now, my London Open 2, I'll adjust it, but let's just talk about this for now. Now, you might begin to ask, why are you showing on all these things? Markets react around kill zones. I told us that the price react at a particular timing in the market. Time reacts funny. Do you see? Look at what has been happening here. Look at when it gets to New York Open. Do you see what happened? Do you see how markets started reacting very well? Now, market is divided into three phases. There are phases that we call they accumulate. Most times, what happens in the Asian session is to accumulate. It just accumulate, and then manipulate. And what it does after manipulation, it expands. What the market does is first, on these places, it accumulates what we say consolidation. It just keeps on ranging. It does not give you any good. We don't really trade in this window. Then what really happened in the London Open, which really is around this axis, this session, which is London session, is to manipulate. So we'll call it the AM, and then this one, we'll call it the D. We call it expansion. or distribution. Now it expands. What we mean by manipulation is that the market tells us if it is coming down, and then this is where the real thing happens. So if you don't understand time alignment and session, you just be trading blindly. When you are buying, market is selling. When you are selling, market is buying. I'm just giving us straight. I told us on the beginning of this class that I don't want to waste our time. I just want to give us what matters in this market, in this industry, not to just give you nonsense. Now, before you begin to, what I'm doing here is on 15 minutes. We start our analysis on 4 hours. Now, if you go on 4 hours, I expand it. Then I was showing us how to draw trend line. Let's take this trend line, for example. You pick this tool. This is the tool for trend line. You take this. I just showed us session, how to adjust session and the timing to it. We'll come back to it. You appreciate what I'm showing you with time. Now, I draw this my trend line upward. Why? Because obviously you can see that the market has been trending upward before it started trending downward. But before it started trending downward, we need to look at some things. We were expecting probably to see the 3 candle patterns. I know some of us will say, we want to see the 3 candle patterns. Of course, I will show you the 3 candle patterns. But we don't just trade the 3 candle patterns just anywhere. I told us that the 3 candle patterns must happen at a key level, which is KL, and then at a key zone. The key level is your support and resistance. Support and resistance. Your key zone is your sessions, right? Your sessions and time. So you have to find time and price alignment. You must find this session, right? This session must align with certain timing in the market. You don't just jump into the market at any time and just waste your time. The market could just manipulate you. So right now, look at the 3 candle pattern here. This also, we can also say is a 3 candle pattern. It must not be perfect. Look at another 3 candle pattern here.
Hello, sir.
Hello?
Sorry, sir. Yeah, the screen is blurry. We are not seeing the write-ups clearly, please.
Is it so with everybody? Is it so with everybody?
No, it's clear in my end.
Everybody is clear.
I can see your screen, though. I can see your screen.
My screen is clear. Maybe it's your network or your phone. I don't know.
So I just cleared now.
Hello? Are we together? Are you seeing my screen clear now?
Yes, sir. Yes, sir. We are seeing it now.
The person that complained, I don't know why he's not seeing. I don't know why he's not seeing my screen clearly. I'm actually talking on one part.
It's okay now. It's okay.
All right. So please just pay attention to what I'm doing. So I showed us that the 3 candle pattern, you can see it here. Look at another one here, but it's not perfect in itself. Look at another one here. Now, look at another one here. It is where these 3 candle patterns form that matters. Not just that you just see 3 candle patterns, say, hey, I don't see them, I don't cut them. You enter. You say, this way this man show us the work. No. You don't just jump in at any 3 candle patterns you see. It is the 3 candle patterns that happen at a key level, and I told us that the key level is at your resistance or support, right? And then your key zones is your sessions and particular time window. This time window aligns with price. You must find this time window and price. Why would we say at price? Price reacts at a particular time window in the market. And it is at that moment you begin to look for your setup. You find out their setup begin to make sense. But we begin to look for a setup at the wrong timing. Now, apart from the 3 candle patterns, we also have the 2 candle patterns. Those that have been following me will understand that this is another pattern here. And this pattern is, what do we call this pattern? Can somebody tell me what we call this pattern? This candle pattern.
Engulfing
Beautiful,
pattern.
beautiful.
Engulfing
This
pattern.
is bullish. This is bullish engulfing pattern. This is where it is forming right now. It's formed here. Now, you don't just enter, if you understand the engulfing pattern, I'll prove to us. Another word for this our engulfing pattern, right? We call this order block, OB. Now, it's telling where the smart market makers are actually accumulating orders in the market. Why they are actually buying. They are positioned to buy. With these 2 candles like this that we see, it tells us what market makers are doing, where they are positioned to enter the market. So what we do with this, we draw a straight line. I pick up my tool here. I come here, I pick my short tool here, and I draw a straight line here. Where this candle, the high of this candle. At times it can come to the close of the body of this candle. That's what I do. The moment that happens, this has not formed. This has not formed. This was into the future. By just this formation. Now, look at where, not just you see engulfing pattern anywhere and just jump into the market. I look at where it is forming. Look at where it is forming. I have a tool that plots previous week high, previous week low. Can you see this? Can you see this straight line here? Can you see this is what it is reaching here? Can you read what is reaching here? Can you guys read what is written? What is written here? Can you read it? Can you guys read it? Hello? Hello? I can't hear anybody.
Is the viewer low, Abi?
Okay,
it's like a squeeze of.
Okay, sorry. Okay, maybe I cannot read it. No, it wrote. What is written here is previous week low, right? I can't expand it.
Okay.
Yeah, it's showing the previous week low. So my. Okay, sorry. Okay, what is written here is called previous week low, right? That is what is written there. Previous week low. That's the line you are seeing here. So it's previous W, PWL. That's abbreviation for it. PWL. So that's my previous week low. That is this line. This line you see, I just highlight. That is what is here. So as the price was coming down in this bearish move like this. This is a what do you call it? Trend line downward. As it keeps coming down, it came to previous week low. In the current week, I was. The moment this candle came here, it reacted because the previous week low is a support. The moment this market reacted at this point, I started watching what would form. The market came down, this bearish candle came down here, and then the bullish candle went up. Mind you, I'm doing everything on the 4 hours time frame. Look at my 4 hours time frame. And then I saw the formation of this candle, this candle, right? So the moment I see the formation of this candle, I position myself. I drew this line, this horizontal line. What I am doing here, this my horizontal line automatically becomes my support. This is another way of finding support. It's not the normal support you people have been learning or we were taught over the years. I'm showing you how to get support. The range of candles can give you support. This point is another support. And what we call this support, we call them liquidity zones. This point you are seeing here, and this point you are seeing here is called buyer's. This is buyer's liquidity. What do I call buy liquidity? Market makers actually waiting here to buy orders. They are positioned here. While some people will be saying, okay, let's enter. Now look at this is another thing here. This is monthly open. I already have my software that plot out monthly open, previous week low. So I don't begin to draw it the way I'm using my phone. On my phone, I have to begin to draw all this thing. It's tedious. On my laptop, I just open everything is plotted for me. Now, based on previous month's low, already it is the support level. Look at what this candles did here. This point is where these buyers were positioned. The market makers were waiting. While if it enters there, we say, let's begin to sell this market and begin to sell. Only for you to think that the market will keep on going down and begin to go up. All they're doing, the moment you enter sell here, I believe you put your stop loss here. The moment you are going on, this candle has eaten your stop loss. You are out of the market. And you keep on waiting that to come down. The moment the market came here, you say, let me enter early. You enter early, and the market didn't even cross previous week low. This is previous week low. You didn't cross it. You are waiting for it to, maybe you didn't enter, you are waiting below here, or you are waiting below here to enter sell. The market didn't enter. It didn't go to the direction. You keep on waiting, only for you to see the market going up. You are still waiting here. The moment this happened, I already know what was happening, that market makers are positioned by themselves by the nature of this candle. And this bearish candle that is standing here, this particular bearish candle, and with this candle has formed what I call the order block. This is a valid order block because this bullish candle is also called displacement candle. I'm giving us a lot of terminologies here. This candle, because it closes above the high of this candle, this is the high of this candle where I plot this line. This is called a valid order block. The two of this candle, we call it bullish engulfing pattern. I call it a valid order block. By drawing a line here, do you see what happened here? The moment this happened, I just enter my buy here. The moment I put my buy here, I put my stop loss here. You can see what happened. See how far the market went, all the way in 4 hours. Now, when I see this order block formed, I don't need to enter immediately on 4 hours. My time alignment. Hello, who is that person, please?
Okay.
Can you mute yourself? What we are teaching is very sensitive. Our time alignment is 4 hours. 4 hours to 15 minutes. So when I do my alignment, when I do my analysis on 4 hours, my entry on 15 minutes. So I'll be looking for opportunity to enter in my 15 minutes. Does it mean that I should not enter here? I can enter here already. I've already seen here. I can just push my buy limit and just step into the market. Now, with this now, if I put 15 minutes, I will have to go backward to take us back a lot. But let me see whether we can still achieve that without scattering the platform. So I go on my 15 minutes. So I have to scroll backward. So that itself can be a challenge. So what I know, I try to zoom out to see if you can take us back to where I did those drawings. Right, beautiful. So I just increase it a bit so that we can see what I'm doing. So you can see on 15 minutes what is happening here. On my 15 minutes, I'm also seeing another block being formed. Look at it here. It's as little as this. But why should I waste my time waiting for another? If I put another block, price didn't retrace to it. Because I expect that price will retrace to this line, this horizontal line I just drew. This horizontal line, I expect price to come to touch it, right? I expect price to come down to this point and go up, but you see, it didn't come down. So I've already achieved that in my 4 hours. All I need to do, if I put my buy order in my, if I put my buy order in my 4 hours, all I need to do, my buy order is already sitting on this line, and my stop loss is already below this place, right? But now, because your stop loss will be very large if you put it down here. That's where we'll come down to 15 minutes. The essence of us coming down to 15 minutes is to minimize our stop loss. So that the moment this market happens like this, validating that this is another block, that the market will come down to this point. This is how far I expect the market to come down to. I can put my stop loss here. So you can see that somebody that's putting his stop loss here could be putting maybe close to maybe 50 pips. While me that is putting my stop loss here, maybe I may be putting 10, maybe 10 to 20 pips. Yeah, the person here is more safer. The person here is more safer than me. Yes, it's more safer than me, particularly if I am entering when there is a news at a particular time that I'm not supposed to trade. There are timing you don't trade when there are news. So you observe if this thing is happening when there is no time, probably after news, this candle you are seeing, this whole thing you are seeing happens what we call CPI. Consumer Price Index is a inflation measurement index, so measure of inflation by the United States. So all these things are when either they're trying to talk about interest rate, cut of interest rate, agreement on that, or tariff. So you avoid this whole thing. In this whole thing, whatever I'm teaching here does not work. No strategy works here. You just enter the market. No strategy works here. There are those that have developed strategy for it, but I have met the high and the mighty. They'll tell you avoid news time. Just avoid it. Wait for the news to finish and begin. These are opportunities to enter. To enter, the news will tell you the redirection. You enter. This is, and that, this thing I'm doing now is on 15 minutes. So we don't do analysis on 15 minutes, but you can do analysis on 15 minutes and execute on 1 minute. Can come down all the way to 1 minute. If you want to focus on 15 minutes, that means that you're executing. If your entry will be on 1 minute, I don't go for 1 minute for execution. I do 4 hours, then 15 minutes daily, 15 minutes daily, or 1 hour. So the moment the price came here, since on my 4 hours, I'd already plotted a pending buy limit. The moment this candle came here, it has triggered my entry. I go back. The moment I trigger my entry, what I need to do is to just go back to my 4 hours. Why do I go back to my 4 hours? The essence of me going back to my 4 hours is to see how far the market can go. The moment I enter from this point, which I have plotted in alignment with this line, I just keep on watching. So let's see how far this market gave. Let me see how many pips from this point. This is how you get the pips. You pick these two, right? Then you right click and drag it. You right click and drag it. Let's say I took it all the way to this point. This has given 989 pips. 989 pips mean $9,890 something. That's what would have moved just by following what I just taught. You would have just made $9,000. If you are using 1 standard lot size. Which equals to $10 per pip. So if you use this, you are 980 pips. Let's say 980 pips to 980 pips. That means you just made $9,800. That is what it means. So, do I have to get to this point to exit? No. We all know that the moment this line was not in existence, but the moment this thing goes up, automatically I have found 2 points, swing points. This point, I've gotten 2 swing points. This is my first swing point. This is another swing point. This point is another swing point. Now, the previous week low definitely has a previous week high, which is this line. Look at it here. So the moment I pick this trade from this point. I'm targeting this point. It's already there, printed out. So the moment I enter this trade, I know that this market is supposed to go here. It didn't get to that point. It got here. This is another resistance. I know that it will come to this point. The moment it got to this point, I started coming down. I expect this market to go because I know that it started from the low. It's definitely going to touch the high. But do I have to be greedy? No. If I just want to have my target for the day, maybe you are starting with $1,000. And $1,000, you are targeting maybe 10% or 5% profit. From this point to this point, I have made, this is 277 pips. 277 pips. This 277 pips is $2,770. I'm good to go. So imagine you're starting $1,000 or maybe $5,000 or maybe $500, and you're doing standard pip. That's $200 and something. Mini lot size, which is 0.1 to 1 pip. But I made $270. It could be equivalent of $27 if you're using mini lot size or micro lot size. It's okay. You are targeting maybe 5 or 10% of the profit or of your account. So if your account is $1,000, you are targeting 10%. And then this market gives you an opportunity to make 20%. Why not? Take it. Instead of making $100, I've made $270. But what is my target? I already know that the market is coming to this point. So if market is coming to this point, I pick these two, I look at it from this point, and then to this point, I'm looking at 383 pips. Forget that last one. That is equivalent of $383. That's a 0.1 lot size. If I'm using standard lot size of 1 to 10, then that means I've made $3,000 and something. So at this point, I jump out. But did the market stop there? No. The fact that the market closed above the previous week high, that means that this market is still going on. What do? I extend to the future. Now, this trend line is becoming my support. I have another swing point. That means that I can enter. Now, all these points, you can enter here. If you have missed this point, this is another opportunity for you because this market had a previous week low. We are targeting this previous week high. So you enter from this point with a plan to come out. So if you miss this point, here you have another opportunity. Not just another opportunity, we have our 3 candle patterns. Look at it here. 1, let me clear it so that it will be clear enough. Our 3 candle pattern, we have 1, 2, 3. So it's happening at a key level. What is the key level? This line you just drew is the key level. So I look at the fact. See what that image. The second candle clear the low of that candle. So what I was showing us there, you are seeing the practicals. It's not that it is no lie here. This is practicals. You are seeing what happened in the market. We went all the way. So when this happened at a key level, what I'm supposed to do from the open of this candle, I just enter. I enter. So from this point to this point, what am I supposed to make? I just look at what I'm supposed to make. If I had entered this trade from the open of this candle to the high of the previous week, I've made 256 pips. Convert it whatever loss size you choose. You times it by 8. That is the money you made. So tomorrow I'll be telling us how to protect your profit. That you don't have to come out from here. The moment the market has gone up, you can begin to have move your stop loss to protect your stop loss that was below here. You can move it to begin to protect your profit. So as this market is going up, you are protecting your profit. If the market is giving you all the way to this point, why not? You keep going until the market comes down and hits your profit, your stop loss. Now your stop loss is no longer a loss. It's actually a stop profit. It's a break even. That means you're broken even. BE. So this is another entry again. Look at our 3 candle pattern happening here again. You see our 3 candle pattern happening here again. 1, 2, 3. So as this thing is happening at this point, and now look at what is happening here. Look at what is happening here. This thing is happening. This is this 3 candle pattern. This particular one happened during Asian session. This mark you are seeing is my Asian session. It's my Asian session. So it's a key, the alignment of my key level and key zone. Key zone here talks about the session. So key level, look at the alignment of zone. It's talking about the alignment of time and price. At this point, look at the movement. The movement is more volatile than this one, than this 3 candle pattern. This 3 candle pattern, because it's happening just around the close of the SL session and the beginning of the London session. Look at how volatile it went. So if you look at this is the kind of trade we look for. It gave a whopping 478 pips just within 8 hours. 8 hours trade. You place this trade and leave it. Boom, you have made 4,000 or something dollars. Now look at our 3 candle pattern. Now this is another 3 candle pattern, but it doesn't look like the 3 candle pattern. This analysis, what happened there, will be reserved for my students, my Forex students. I will be talking about this in my class. You can see what happened. I know how much I made both in my demo and my live account here. Small amount of money, but I know how much people made here. So this analysis now is for my elite group and those that will join in. We will be subscribing for mentorship. And so this what happened here is more powerful than what. It's not too powerful than what. If you can just master what I've just shown you here, well, I will tell you congratulations. My time is up. Any question, please?
Question, sir.
I'm listening, sir.
This trend line, you can only draw it after the swing point, the second swing point, at the point where you enter the trade.
Yes.
And so I just want you to clear that. You already drew this line before the candles built up.
Yes, I was drawing it here now. How many of us remember that I didn't draw it all the way? I started there, but I say we'll start from here. And you know that you always have to update your trend line, right? You always have to update your trend line.
Okay.
It's not 100% mechanical. Because if you have to just say after this one and this one, because my trade started from here. So I take it from where my entry started. So you see, this was just my This point was just to give me a clue of where I am heading to. Just a moment. This stuff can be. So this gave me a clue of what to do or where the market will be heading to. So I just waited for this opportunity. The moment this happened, I connected these two, right? The moment this happened, I just knew that my market began from where my entry. This is where my real trade began. The real trend began. So I now concentrated on these 2 points. The fact that I already have 3 points, swing points, 1, 2, 3. I know that we are in a bullish move. Now we'll now continue and I'll pick it, put it from day 1. And you can see. Now what matters is that it cannot be perfect. The swing point, what matters is the candle closing above the trend line? Yes, that's what matters. Look at this one. It closed above the trend line. Everything is closing above the trend line, closing above the trend line until the trend line was broken. And this break in trend line tells us that there is change in market structure. The first structure was upline. Now we are having a new market structure, which is downward. And what happened here, I say I'm reserving it. The change in market structure, will continue that with my allied group. What to observe when the market structure is not just enough for a change, for the trend line to break. When do you know that a trend line is about to break? How do I know that this will happen? Before this happened, we already entered the market. We'll make this one, we'll make this one, we'll make this one. But if you are following just trend line, this is where you are supposed to enter from this point. Change in market structure. This is where you're supposed to enter the market. And then you make the profit from this point. Because this is not even a perfect. This is, you see, this here we didn't have our 3 candle pattern that I spoke about, but we have what look like a bearish engulfing pattern, which is this. You know the perfect one, but what do? You make use with what you have. Please, any other last question? Because I am tired. I've been giving signals from morning on synthetic and then trading my own account and then studying for this class. So it's really stressful for me. I'm really tired. One last question.
Sorry, you mentioned so many times here, which are still new to some of us, me particularly.
Most of you. Yes.
Other block. I understand the previous week low, previous week high is and 15 minutes entry. I understand key levels, but this issue of aligning time with price, London Open, whatever, I still have not really.
Many people will not understand. Many people don't understand that for now. Hello, sir. I understand your question. I have understood your question.
Indicator.
Hello, can you allow me to talk?
Yes, sir.
This currency I've been talking about is gold. Whatever I've been doing here is on gold. Everything I've done here on gold, and this pips calculation I just did here, if it's on gold, is more than that amount of money. That calculation I do, if you pick 10, you're talking about $90,000. Just that short movement from this point to this point, you have made close to $100,000. So the currency I'm talking about here is, this is gold. I have different strategies I use to trade gold. This is one of my premium strategies. I just decided to give it to us as bonus. But I cannot go beyond that for this class. This is a free class. And I'm telling you that what I'm giving you guys here, it's enough to make you rich. I spoke about many things. This is an order block. Another way for order block is bullish. This is a bullish order block. This move is called bullish order block. When you have the opposite one, you call it bearish order block. The three candle pattern is also an order block. Look at it here. So just master that one in your head. I cannot talk more than this. This is 1, 2, 3. Now look at it here. You draw this line into the future. Now this was a news. So the news invalidated everything. Because if you enter from this point, if I enter my sell here, my stop loss is supposed to be here. But this candle has already taken me out. So what I'm supposed to do, if the moment this market came here, I'm supposed to enter after retracement. So I'm supposed to enter the moment this candle came here. But because this was a news, I just avoided entering. So I don't put the pending order. This market retrace back to this point. I wait for this candle to close below this entry, which is here. This is my safe entry. So I enter from this point down to this point and exited at previous week low. And then when this candle formed, I was watching. It gave me another opportunity to enter long after I had made this profit from this point to this point. Why did I enter from this point to this point? Is because of this 1, 2, 3 candle formation. But it is not perfect. This is the one I would have used. Look at another minor bearish engulfing pattern. So you call this bearish order block. This is how you spell it, order. There are other terminologies that honestly it has to be in my mentorship class. But what I'm giving you us, nonetheless, is enough to allow you to keep on the research. Tomorrow, we will still do this. So don't worry, we'll be talking more of this other block. There's one I wanted to talk about, which is a fair value gap, but honestly, time is not going to be enough for us. Maybe if there's another free class, I may talk about that. But I just want to concentrate on not this for now. The combination of this and this is a gold mine. Especially when I'm trading gold. I make a lot of money in gold, to be honest with us. But what I'm showing us, using just the order block in gold, you will look for me and say, let's go and eat chicken. If you are really following what I'm teaching us, just the order block. If all you're looking for, look at another order block here. Look at another order block here. What you call your bullish engulfing pattern. It's not perfect, but look at this candle. Reacting to it is the close of this candle. The close of this candle, the bearish candle. Look at how far it went. Look at how this is the 3 candle pattern, but it's not perfectly. We needed this to happen somewhere here to take it serious. But well, look at what happened. So, but when we have this happening at a key level here, this is how far it took the market. You can see how far it took the market. This also was happening. Is a 3 candle pattern. 1, 2, 3. It was happening at a key level. It's just that my indicator didn't plot it out. So look at how far it went. So the class is interesting. Even if you guys don't say it's interesting, me, I know it is interesting.
It is.
I told us today it will be a bit advanced, but I'll be going more practical to show us this. We'll continue tomorrow. By the time we finish tomorrow, the thing will begin to rest in our brain and to begin to make sense. So I believe for now, nobody has any question. I have posted the video of the 2 other days. I know of all the videos, yesterday on and today's video is one of the video everybody will want to watch. Even experienced traders will want to watch this video. And many people are trying to find many ways how to trade gold.
Can I go ahead, sir?
Yeah, yes, last question.
These your indicators, especially the one that indicates previous week low, previous week high. I know it's not a free indicator. How can we get it?
Please, we will talk that after the class tomorrow.
Okay.
Yes, sir. Yes, sir.
All right. Thank you,
sir. All right. In the absence of any other question, please, I am stressed. I am tired. Please, you permit me to end this class now.
God bless you, sir. Thank you, sir.
Thank you so much, everybody.
Thank you so much.